Hello and welcome to interest.co.nz. I'm Janae Tibbs-Shirani and today I'm joined by Summer KiwiSaver's Martin Hawes. Thank you for joining us, Martin.
Hi.
Look, I'll give it to you. You picked it with the election in the US. You said that you thought Trump would win.
Yeah, not one that I wanted to be right on,
Yes,
actually.
Right.
Yeah.
Yes, it's... yes, I won't voice my opinion. From an investment perspective, how different is the world today than it was last week?
Oh, it's different. I think it's different. I think that there's the big thing going on, I think, the one thing that Donald Trump will get through the Houses of Congress and so forth is tax cuts. So I think that will happen. And, cast your mind back, what he said he wanted to bring the corporate rate from 35% down to 15%. And that probably will stimulate the economy. It'll probably stimulate companies. The other thing that he said he wants to do is infrastructure. And the United States is probably a bit like New Zealand, overdue for some infrastructure programs. But on the one hand, you've got lower revenue, being the tax cuts, and higher lower revenue for a start off anyway. Tax cuts often lead to higher revenue because stimulates economic activity. So on one hand, lower revenue. On the other hand, you're spending money on infrastructure. So where's the difference going to come from? Well, it's going to come from higher debt. So America's going to be borrowing more. Probably the US government is going to be borrowing more. So the world is different in the sense that I think interest rates are likely to be higher than what they would have been 3 or 4 days ago.
Sure, and look, on the other hand, talking about sort of these contradictions, we have more fiscal stimulus, more borrowing, more investment, as you were just talking about, and then we also have protectionism as well. So in terms of global markets, how are these two conflicting things going to work?
I don't know how that will play out. But if you look at the bond market's saying, we don't like this terribly much, and we're pushing the price of US treasuries and other bonds down, and we're pushing interest rates up. And I think that it's a bond play, not an equity play. So it's bonds that have really moved now. Equities have done that, but they've thrashed around and kind of gone nowhere. The protectionism thing, I think, would be one of the worst things to happen. The big beneficiaries of globalisation is not some fat cats sitting on Wall Street. It's actually poor people. There have been 1 billion people in absolute poverty over the last 25 years who have joined probably the lower middle class, but at least the middle class. They're no longer subsistence farmers. They're no longer abjectly poor. And I think that to go back into protectionism, I think would be one of the very worst things. Globalisation and free trade has been a wonderful thing.
Martin, mum and dad investors in New Zealand, private investors, what are your tips to them now? Are you still sort of talking uncertainty as much as you were earlier in the year?
Yeah, I think there's a lot of uncertainty still. In fact, it's probably increased with this because we don't know what Donald Trump will do. Choose any one of the 150 promises that he made that he contradicted. So we really don't know that. What people need to do, I think they need to continue to be very well diversified. I'm remaining cautious on my own portfolio. I'm not increasing risk on it yet. I'm not buying equities yet. The two things that I am considering adjusting, and Summer KiwiSaver will consider this as well, is we look at investments that are interest rate sensitive. And you've got two now. Obviously, fixed interest or bonds is interest rates sensitive. So we may lower our allocation a little bit to bonds. And the other one is property, because property depends on borrowing a lot, and the income from property is compared with bonds. And so if bond yields are higher, then property yields need to be higher as well. And you do that. You do both, of course, by adjusting price. So my sense is that if you were going to make any tactical asset allocation, it would be a little bit less in fixed interest and a little bit less in property.
Okay. Also, post-election, if we're talking sort of winners and losers, the winners seem to be pharmaceuticals, defence, oil and gas, and the losers, sustainable energy, because Trump is a climate change denier, and also car makers, for example, based in Mexico. I'm just wondering how you think this might affect the drive that we're seeing at the moment for sustainable and ethical investments. At the end of the day, when you're investing, you need to make money, and if we think that sustainable, focused companies are not going to be as attractive with Trump, then how does that affect that movement, which really seems to have been gathering a bit of steam in recent times?
It has, and it certainly has in New Zealand. I think it's been gathering steam throughout the world for a decade or more. I've been banging on for about 20 years, and all of a sudden and I think it's because of KiwiSaver, we've all of a sudden got an increase of interest in it. I think it's a time who's come, and I don't think the socially responsible investment trend will actually lower all that much at all. People might thrash around to look for suitable investments in that area. It might be a bit more difficult. But I don't think it'll stop people. In fact, if anything, I think if you look at the protests that are going on in the United States now, and it's like these people are Democrats and people probably from the left, who are themselves probably saying, well, if the election might have been rigged, or they certainly don't like it. Those people can make a statement, I think, by trying to choose socially responsible investments.
Right, so there will be sort of that there is another side, and there will be a backlash.
Yes, yeah. I think there probably is going to be a backlash on that. The one thing about Trump, of course, is that the President of the United States is not a dictator. He can't just push a button and it all happens and get rid of people in dastardly ways that he doesn't like. So he does have both houses of Congress to get through. He's much freer on foreign policy, and I'm as worried about foreign policy as anything else. I was listening to somebody on the radio this morning saying that he has an attention span about that big, or is it that big? Very short attention span. Doesn't particularly like policy, and you get something like the Russians marching into Estonia. Estonia is a NATO country. It's meant to be one for all and all for one. Will he honour that? And Russia, North Korea, these kinds of places will no doubt test them. They'll give him a prod and see how he jumps.
Yes.
And I don't know how that's going to work out.
Yes. Okay, Martin, well, thank you for your time. I think that uncertainty, caution, the messages coming from you is something we will keep in mind, and look forward to sort of seeing how this all pans out. But thank you so much for your time. And I've been joined today by Summer KiwiSavers Martin Hawes, and I'm Janae Tibshirani.